presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, it's a beautiful day. Got our man, Jim from Minneapolis. We're going to take it by storm.
Take it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Serve the one you love. Once you decide to be a couple there to serve the one you love, to serve your love to your lover, and every kiss and every touch you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials up 429, NASDAQ up 37, S&P's up 48, gold contract down $35.80, trading at $16.96 an ounce. Silver down 30 cents, $15.32 an ounce. Whoops, there we go. 1 second. How is that? Sorry about that, folks. Light sweet crude off $1.67. $18.20. That's actually hard to comprehend, folks. But bottom line, it looks like it's actually going to bring this up. It looks like it's going to run down to the $16 level. Notes and bonds. You get the 10-year right now down 8 ticks, trading 138.31. The 30-year off a full point plus 4 ticks at 180.09. And King Dollar down 214 ticks, trading 99.811. The euro is at 108. The yen is trading at 107.63, and the British pound is at 124 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We'll start with the futures, folks. I'm going to bring up an intraday chart out here, and you're going to see where the battle line is set up. So the battle line right here, let me get that. There we go. The battle line is set up right at the low of today is at 28.21. We're at 28.35. We had just come down there. We came down there with 20,000 contracts 20 minutes ago, and that's going into 26,000. Now you're doing a nice little bounce up here. Bottom line, we'll see if we can get any juice on the way up. This bar here would need more than 32,000 contracts, and right now you're it's not going to get it. We're 9 minutes into the bar, and you got 15,000. So I suspect, number one, we're going to try to probably test that low once again, and we'll see how that shakes out coming into the close. What we do know, folks, is that the MO in this market is that the last 10 minutes of this market each and every day, the bottom line is that they spike those S&P futures a good 10, 15 points. So we had option expiration. We'll see if that's how that baby's going to play out. Inside the NDX 100, that's been selling off all day. We had a high out here today of 89.66. You're down 230 points from that high. The NDX did break the lows that we're talking about that were established out here in the S&P. And, you know, you had the spike down. That spike down, we did 77,000 contracts. You back up, test an ice right here, and we'll see the number to keep your eye on. Inside the NQs is 87.14. We're 15 points over that right now. That is the lower range. You're getting that lower range, and in both cases, I'll bring back the S&P also. In both cases, before we charged higher yesterday coming into the close, they both have higher volume spikes. The NDX 100 has a nice spike down at 86.05. We bring the S&P up. And the reason I'm bringing these up is that what does happen is that you can get these babies tested. So I bring the S&P up. Wow, the S&P is a lot lower. Just because the S&P is held up, basically. Inside the S&P, that number is all the way down at 27.55. I don't expect we're going to go there, by the way. But, today I don't expect we're going to go there. Gold contract. They whack gold out here today coming into a weekend. Gold's down $35, trading $16.96. If we get over and we look at that, and gold has some volume on the way down here, folks. It's coming back to its breakout area. We've done 213,000 contracts. That's big contract volume. Now you're going into just about the same. Yeah, you're going into 204. And 219, but you can see 213 going into 219. That's a large number, folks. So I suspect we broke topside. When we broke topside in the gold market, it was April 6th. That's when gold went from 1638 to 1715. That's your ABC structure on the way up. It doesn't negate the ABC, because what you do have here is that you're still going. Well, we'll see how this works out coming into the close. Because what you can't do, you don't want to be doing over 220,000 contracts on the way down. That would only be 7,000 more contracts. But most times inside of the gold market, most of your contract volume is coming in when the pit is opened also. And the pit's been closed since 1:30 this afternoon. We'll see how this shakes out coming into the close. Notes and bonds, it's going to get really interesting inside the note and bond market, because what you have inside here is that you went sideways. Notes as well as bonds were bottom line higher, gave it up in price, couldn't handle the price. You've done 1.2 million contracts inside of the 10-year. Now, that's not a lot of contract volume, so you really have a sideways move. You get light volume inside of that move. Oil. We got to take a look at oil. When you see oil, I'm going to bring oil back, folks, and I'm going to put it on a continuous contract so you can see where it's aiming for. Oil today, you have volume, you have price, all of the above. I got to bring this back 30 years, 3-0. Pretty amazing to take a look at what is going after. And bottom line, this baby is going after, I believe, $16 and something. It's just taking a while to get back 30 years right now. But we will get that baby back for you. This has been a one-way move down, and this one-way move down is pretty amazing. We were trading out here in October of 2018 at $76. You're at $18.16. And you can see what's sticking out here, $16.70. That's the low that was established in November of 2001. And, the bottom line is that it doesn't have to stop there. We had in 1998, you're at $10.35. And that $10.35, in 98, you can go all the way back to 91. And the range there was $10 to $26. That was it. So what does happen is this. We're not just going to go down there and then spike up, folks, okay? This type of destruction is going to take a long time to basically heal. And most times when you get that much price destruction, the bottom line is you're going to have to basically build cars, and I suspect you're going to have to build cars 2, 3, 4 years in order to get to higher price. Dow Industrials right now at 446. You get the NASDAQ up 40, S&P's up 50. Stay right there, folks. Come back when I'm at Mr. Basil Chapman.
Folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 268, Nasdaq's up 48, S&Ps are up 52. Let's go over to our man, Mr. Bud Spriggs from the mortgage firm. We are talking mortgages, folks. We're talking interest rates. Bud's number, folks, is 727-798-3888. That's 727-798-3888. Bud Spriggs, what's going on?
How you doing, Tom?
I'm doing great, man. Yourself?
Good. Staying busy.
That's, so we got to get you on. You got to give us an update here. I mean, this has been quite a month, right? I mean, we had a couple.
It's been a while. I figured that you were kind of busy yourself, with what was going on. But, I think the last time we spoke, we were still watching that 10-year note go down a little bit.
Yes.
And I kind of reported in that that rates had kind of just stopped moving downward. You're a little surprised about that. And then after they inched up a little bit, and then I think the system in general just got inundated, and they had to stop the flow, and rates went up against all other indicators, and I think they were just trying to stop the spigot.
Yes. And so what we're talking about, folks, is that this was before coronavirus hit. We had the 10-year, like the 10-year right now is at 0.641%. So the 10-year actually got down to 0.31, but yet the long-term rates in the mortgage market did not go down as dramatically because the amount of people that were getting the mortgages, that they just couldn't, there was more demand than supply, right, Bud?
There's only so much the system can handle.
Yes, exactly.
I think it's as simple as that.
Yeah.
And then of course, we got the virus stuff coming in.
Yeah.
And they start seeing different things happen on the unemployment and all that. And that's another reason for them to kind of step back. And so I think all of a sudden things got regrouped. We're getting a better grasp of things, and rates are starting to, they've come back down.
Now let's talk about, so on conventional mortgages, they've come back down, right?
Yeah.
So I know we got a call yesterday. The father was going to basically sell the house to his daughter, and he was talking about a cash out. But I had said to him, but I knew you were coming on today. I had said to him, I think you just do a conventional mortgage, right? I mean, the daughter could do a conventional mortgage. That's how he gets paid off, right?
If she could do that, that would be the way to go.
Right,
yeah.
Right. And on so here, let's talk a little about, I know conventional mortgages, bottom line, you're buying single families, the commercial market or the multifamily market or the investment market. Now, the restrictions wouldn't be a restriction, but, the regulation, whatever you want to call it, in order to get those, that has gone up. Is that correct, Bud?
Well, basically the hits to pricing for buying going conventional and buying a 2 to 4 unit property, especially as an investment, the hits were just changed. So where I might have quoted somebody 4.25 a couple of months ago. Now, this was at the very bottom.
Yes.
He was buying an investment duplex, and he was getting a great rate, great credit, all that stuff. He came back and went under contract about a month later, and his rates were in the upper fives, paying points. And that was, and to me, that just indicates that they're still wanting to do the real good, easy paper, and anything with risk, they're kind of keeping outside where you really got to want it to get it.
That's a big number, man. 4.25 to high fives in points. And what a point, if you can explain to the audience what a point is, Bud.
Just say a point is 1% of the loan amount. So if you're borrowing $100,000, and you're paying 1 point, you're paying $1,000 discount points.
Right. And so you can see, folks, is that the thing that's intriguing this time, Bud, and I think it's going to be healthy myself, no, none of us like to pay more money for what we're doing. But what I like about that is that we don't want the real estate market to fall apart. So I think it's good that they're basically doing that, because the reality is, right, that this time they were giving away money like in 2007, 2008 to anyone that just had a signature, right?
Well, I'm going to disagree a little bit there, because I was there in that market 2007, 2008 when we had the subprime. Right?
Yeah.
That was when they were giving away money. You could walk in with a 580 credit score, show me your W-2s and pay stubs, and basically get an 80% first and a 20% second to buy a home to live in. Okay?
Really?
So you've got no skin into the game.
Right.
Your credit's not great. And the minute things hit, that promissory note that you decided to pay on, all of a sudden you decide you go against it because now you think you're losing money.
Yes.
So they were making it a lot easier back then. But I do agree with you. I don't think they're going to let the real estate market get hit like that, because what happened after that, we had the recession. It showed that the real estate market really is tied to everything. No,
I agree. What I meant by what I was saying is that it's not bad when they tighten it up, and it's at the beginning. It hasn't gone on that long until we all shake out and say, okay, what is the repricing inside the investment business, right?
Exactly. Yeah. And listen, the same guy that I had on the sideline, because he really wanted this investment property, we got an extension. We just kept waiting to where he could actually get into it. It wasn't perfect, but it wasn't as painful as what it was right after the market changed.
Yeah, that's great to know, man. So let me ask you this. So still Fannie Mae, Freddie, I know JP Morgan, I was trying to figure this out. JP Morgan, and I think this is on jumbos, JP Morgan went to 20% down, because the Fannie Mae, Freddie Mac, I mean, first-time home buyer and all that, are we still at 3% down?
Listen, I just went in because I figured you might be asking. You got 3% down on a first-time home buyer.
Yeah.
Let's say somebody that's moving up, they've owned a home and they're buying another one. I priced it out 5% down, and I was getting in the low threes for a 30-year fixed.
Wow, that's awesome, man.
That's good money.
That is good money. There's no doubt. There's no doubt.
Right.
That's huge, man. There's no doubt. And I guess the real number is going to be where people have to show that they're working, right? That's going to be intriguing to see. You can be all set up. You had a job. You laid off, probably temporarily, hopefully. So if people are looking forward, they got to make sure that they have a paycheck coming in still, right?
Yeah, actually, the day of closing, we do the 10-day verbal verification of employment.
Yes.
We do the credit refresh within 10 days, but the day of closing, I myself have to call, and this is probably just to cover us, I have to call the borrower and ask them if their company that they're working for is still open.
That's great information, man.
If they're still getting paid,
Yeah.
and if they expect to be employed later.
Oof, that's intense, man.
Right.
Yeah.
And I've run into it. I've run into the situation where we didn't get the right answers. So it's affecting a lot of people.
Yeah, no, listen, we're 21 million people unemployed right now, and, you know, there's plenty of those folks that weren't working at bars and restaurants that, you know, thought they might have been insulated, but yet the amount of sales went down in these large companies. So I can see it, man.
Right.
Yeah.
So it's something I look at. You know, actually, when somebody calls in to get pre-qualified, I look at the whole picture now, and I look at what they're doing, and I talk to them about it. You know, you don't want to get their hopes up and then find out later that they're not able to buy a home.
No doubt. Listen, folks, you can get hold of Bud at 727-798-3888. That's 727-798-3888. Bud, thank you so much, man. Really appreciate the education. Look forward to speaking to you next Friday.
Thanks for calling, Tom. Have a great weekend.
You too, man. Thanks. Bye-bye. Stay right there, folks. Come right back. Dow 480, NASDAQ up 56, S&P's up 54. We'll come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has developed a daily programming lineup for traders by traders. We start every trading day live at 8:30 a.m. with Tommy O'Brien hosting the morning market kickoff as he starts the day off by breaking down everything you need to know about what's going on for the trading day ahead. At 9 a.m., Larry Pesavento takes your calls and questions live on the air for the opening bell as he hosts Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the Bull Bear Trading Hour. At 11 a.m., it's Kevin Hinks and Alex Coffey from TD Ameritrade Network with Fast Market. Basil Chapman at noon with the Tiger Technicians Hour. Steve Rhodes hosts the Trader's Edge at 1 p.m. Dave White with the Power Trading Hour at 2 p.m. And Tom O'Brien closes out the day for the final hour of trading live from 3 till 4. Don't miss a second of our daily programming lineup. Tune in to Tiger TV every trading day live at TFNN.com. Educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 506, NASDAQ's up 65, S&P's up 57. Let's go over to my man, Mr. Basil Chapman. And don't forget, folks, every trading day, Basil does an outstanding show here for you at 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, Basil did an outstanding webinar, folks, live webinar all day long. Yesterday, great webinar. The day before yesterday, actually. Bottom line is that we have this archived up here. It's not too late to get it. You can come over to TFNN. You go right under featured content. The bottom line, you can take You can take the webinar right now. You can watch it as many times as you want. We're all basically trapped in the houses. Great education. Basil Chapman, congratulations, man. That was a great webinar.
Thank you very much, Tom. It was, it's so interesting, you know, when we do these things, when we have basically students that we're coaching, I always feel like we learn just as much as they do. It is always something. The market is always offering you something else, and it's just the way you have to deal with it. And in the Chapman way, let me just show this for a second here. We're always looking for the lowest low bar, and the ideal is that we want to count as many as 4 peaks to the upside, go from a buy signal to a buy mode. And it can go higher. It can go all the way to 7 peaks, A, B, C, D, E, F, G. But I try to make it as simple as possible. I'm going to show you something right now. Look at this. This is what I was showing all. Oops, I didn't mean to do that. I was showing all through the session on Wednesday. We did this live. Look how many Ds there are. This is a 2-minute chart. There's a peak D. Look at the pattern of the V shape. That's what we were looking at. Look at the way right here. And it doesn't matter if it's a 2-minute chart or 5 on the right here. It's a 10-minute chart. Look, right there. Look, the stochastic comes down to the bottom, the unbalanced volume.
Yeah.
MACD turns around. And we were following this all day. I kept, whatever we were doing, but I'd stop and say, let's see it in real life. I don't know what's coming up. You don't know what's coming up. Let's use all the technical tools.
It's pretty cool that you had a two-way market there, too, on Wednesday, which was great.
Oh, thank you for mentioning that. Yes, it was absolutely fabulous. It was sharply down. And not only that, there are so many instruments that you can use as inverse instruments, like the SOX, the SOX, that's 3 times short the SMHs, which is what we did. Got very nice signals there. So this is basically the whole thing. It was from 9 o'clock to 9 o'clock till 12. We actually went a little later than 12. And then before 1, we were back at it. Very few people want to leave. We just want to keep going. So we went all the way to 4:30. And it was very constructive. And what they're going to get is they're going to get this curriculum that I outlined. I sent just an example to everybody beforehand. But this is what we dealt with all day. And they can keep referring to this, and then they'll be able to watch the webinar, keep referring back to this. So you can see, you can scroll down. We've got all the topics to be covered. It's just extremely thorough. And I enjoyed it, and I've got some really nice responses. I do appreciate that people actually took the time to do this. It's time out of your life. And it's, you're paying money for it. You expect something back. And I hope I really gave them their money's worth, because we covered a lot of material. And even now, as we're looking, this is the material we covered. Look at that fast-moving average of the MACD, how strong it is. Look how the price went right through that midpoint, left side, right side, price time match. This is live. I mean, this is what we're doing, and that's what we did all day. So anyone who's watching it, you'll be able to feel as if it's live, as if you're right there, because we go from fixed objects to moving objects. Really looking forward to hearing more of the response, but so far it's been very good. And they get my newsletter. We've had some really good results in the newsletter. So I think it's very comprehensive, because the newsletter every day explains the waveform on the whatever positions that we have.
Exactly. And folks, it's real easy to basically get in this webinar. You come over to our website at TFNN. You're going to see it right under featured content. It's $395. With that $395, you can watch this many times you want. As Basil said, it's a long period of time. So it started at 9 o'clock in the morning, going to 4:30 in the afternoon. Bottom line, you get a great newsletter for the whole month. Check it out, folks.
And what's nice is that they can stop it at any point to just go back to reflect. I think that part is very important.
That's a big number, no doubt. Well, listen, man, you have a great weekend, a safe weekend, and we get a market, man. There's no doubt about that.
Certainly do. Thank you very much, Tom. Have a great weekend.
You too. Thanks so much, Basil. E-minis, Dow, NASDAQ, they're running it, baby, coming into the close. So this is going to get really wild watching this close, because what we have had each and every day, folks, the bottom line is that into the close, they've run the S&P. But let's go take a look at this S&P right now. And we bring this baby up, and what you're going to see is that in the last hour, we just went from the low that out there was at that 28. Well, the last low wasn't 28.21. The last low, I believe, was 28.31. Not 28.24. We got to 28.24. The low today was 28.21. Right now, you're 28.47. Now, this is going to be the bar, because what we're looking at right here is that it's the first bar of the downdraft out here was 10 o'clock this morning. So the top of that bar is at 28.53. And right now, you're at 28.48. Let's go to Michael in Niagara Falls. Hey, Michael, what's going on?
Yeah, hi. Thanks for taking my call.
Sure.
I'm looking at the XOP.
XOP. So let's see what we got here. This is the oil and gas exploration ETF. It's up $2.99 today. And I believe, when you get oil getting smoked, but yet, you get ExxonMobil up $3.10. The CV Chevron is up $5.77. You get some volume behind it, so I can see why you're looking at the XOP. And this is about as deviant as you can get, folks. You get oil trading 18 handle. Do you own this? You're looking to buy it, Michael?
I'm looking to short it.
You're looking to short it. Okay, don't short it yet, because what you have here, this is actually a buy. See the day from the 9th of April. That high volume high there, $45.54. It wants to test that at least. That's how this is set up. And you could have an ABC structure on the way up, That's what's going on. See, there's divergence in a huge way. I was bringing this up yesterday. If you look at Exxon, if you look at Chevron, right, the bottom line is that these are nice setups to go to higher. These stocks have got killed. You can see Exxon has a high volume high at 46.73. You're at 42.29. Chevron, and this is how markets, folks, are just, the deviance is sick. You get oil at a lower price, but yet Chevron's off its low by 30 points. Yeah, don't do it yet, man. That's,
Okay.
Yeah.
So wait for the test.
I think it's going to be an ABC up. I think what we have happening here, it was just, I trade these stocks a lot, and what happens is this, is that the oil stocks, the big oil stocks, start heading down way before oil start heading down. And when I say way before, it's like 3 or 4 weeks, okay? And it looks like that they basically start heading up before oil's making lows. Like Exxon went from $71 in January down to 30, and they're heading the other way now, man. So,
Okay. All right, I'll wait. Thank you.
Have a great one, man. Have a safe one. Dow's up 567, Nasdaq's up 86, S&P's up 63. Stay right there, folks. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow is up 596, Nasdaq's up 91, S&Ps are up 66. Now, watch this, folks. It's going to be really cool. I'm going to show you something here. They love running it right into the close. That's what we were talking about. And if we take a look at this, what you're going to see, this is a 10-minute chart. So what you're going to see is this. You had one downdraft that was established out here at 10 past 10 this morning. That number is 2853. Now, when we came down, folks, you came down with 60,000 contracts. We just went up into that, and you did 38,000. Now, that's not bad, okay? Not enough, but it's not bad. But let me show you something else. This is where my take is, this is where it's going to stop dead in its tracks. Then you had the opening bar at 930. The opening bar at 930, the top of that is 2854. The bottom is 2840, okay? So when that's lined up like that, we have 14 minutes, you have 17 minutes into the close at 4 o'clock. The futures are open to 4:15, but what does happen on Friday, folks, for all general purposes, is going right at the close at 4 o'clock. So this is the battle line right here. If we already just hit this 2854, so the next number, it hadn't been able to hold that, so the next number you want to be looking at is that 2853. And if we stay under that for, like another 5 minutes, the bottom line, you'll see basically a slight sell-off coming into the close. So it's going to be pretty wild watching the whole thing shake out. Let's go take a look at this. If we go take a look at first we'll take a look at Barrick. I see. This is one of our tigers here over in Denmark. Kenneth, what's happening, brother? We love you growling a problem with us. And I do remember you from the workshops. I hope your son's doing good, man. Let's see. Let's take a look at this. Okay. So what we have out here is this. You get 217,000 contracts. That's going into 219. So what that means is that, even on Monday, gold can go lower. So I wouldn't be buying it right here. That's how this is set up. Now, that's the contract. Now, let's go look at the GDX, which is the GDX are the equities. Equities a whole different ballgame, meaning that, if you're going to go in the equities, the GDX, I'd go in it. That's, you can see the equities, they're pulling back with 20 million shares versus 59. So, what has happened is this, folks. I have no clue how you could actually trade the futures inside the gold market. And I've done it, believe me. I'm not saying that, but I haven't done it lately because of the fact that whether you're a bull or a bear, when you get moves at $50 and $60 both ways, it just doesn't work. The equities, however, inside the gold market have been steady. Nothing's easy to trade, but what ends up happening is that when you get a trend going, that trend is going topside. Let's go to Rich in Lincoln City. Hey, Rich, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. How you been, man?
Not too bad.
Good.
Got sunny weather, so you can't complain.
That's a beautiful thing. Totally.
Especially in Oregon.
Yeah. So let's see. You want to look at Independence Realty Trust?
Yes, because I know you're into real estate, and there's been articles that have come out in the last few days about folks that have decided not to pay their rent, whether or not they had the money or not.
Yes.
I'm not going to debate that.
Right. No, for sure. Right.
But an example is IRT. I mean, they have over 15,000 apartments, and as of April 8th, they had collected 89% of their April rent receipts.
Okay.
With me anticipating that being lower for the month of May, is IRT a sell now?
It wouldn't be a sell, no. I mean, this equity just, went from $16. We hit a low a week and a half ago of $6.80. If you're looking to buy it, I'd be, if you got to retest the 796, I'd be a buyer.
Okay.
Yeah.
I was just also anticipating, I imagine they're going to have to cut their dividend.
They're definitely going to cut their dividend. Now, let's see. So, 7.9. So they'll cut their dividend. Yes, they will. But don't buy it for the dividend. What you'd be buying this for, if you wanted to buy it, okay, would be that I suspect, see, this right here, folks, let me just show you something. They own, it looks like they own these garden apartment buildings, okay, they're pretty cool. Yeah, well-located garden-style mid-rise apartment buildings, okay? The bottom line is that people are going to have to pay their rents, if they want to live somewhere. Because what you have is this. We have a huge shortage of housing in the country, folks, okay? So if, in fact, during this crisis, that what some people are doing, they're saying, okay, I'm not going to pay my rent. I would suspect what landlords are going to do is, once this gets up and going again, they'll take care of what they have to take care of. There's plenty of other folks that want to live in a decent place, and that's going to happen. Because I could make the case on the other side of that what you've never had is that there's plenty of people that are going to make more in unemployment than they've ever made. There's plenty of people that have never had $1,200 in their pocket. You see what I'm saying? So
I do.
there's definitely the cash is out here. The real question is going to be at how it works. And then one of the Tigers he is saying that yes, the courts are going to be backed up. And what happens there, it just depends what state you're in. Like if I was in Massachusetts right now, I would say that being a landlord in Massachusetts, you're in trouble. A landlord in Florida, guess what? We have right now. You can't do any evictions for 45 days, but an eviction in Florida is 3 days. So it depends what the rule is inside of your state. That's what it comes down to. And so it's going to be a battle out here. There's no doubt about that. And it's serious business. But I suspect when you get if that was a commercial property, you just called on Rich, I'd say no. Okay, commercial property is going to be a huge problem. That's where big companies are going to be fighting big companies, right? When we're talking about apartments that you and I are living in, or the bulk of people are living in, people for 4 months.
Some of these folks are under the impression that by not paying their rent, it's a grant, and they think it's going to be forgiven because they've only listened to parts of the story of all of this that Congress passed. And that's what's going to be scary is 6 months from now, when these folks still haven't paid, an organization like IRT would have to take them to court. And that's so costly and time-consuming.
Well, it depends on, like where you are. See, in some states, it's not even court. You just do a filing, man. That's in Massachusetts. That's a court, the whole bit. I understand that. It's just I don't know what it is where they are. Let's put it that way. But
they're in Georgia, those kinds of states along there, Carolinas.
I suspect that's going to be like Florida. That the tenant probably doesn't have a lot of rights.
Okay.
Cooking,
All
brother.
right, Tom. Appreciate it.
Have a great one, man.
weekend.
Have a safe one. They're running the S&P, folks. Bottom line is that this MO is here, and there's just no doubt. This is we got the S&P right now up 80. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow is up 696, Nasdaq's up 115, S&Ps are up 80, and bottom line, folks, is that we have option expiration out here, and this very well could be another ABC structure on the way up, because the bottom line, what you have out here, we're at 856 million right now in the NYSE, but we only need about 1.2, 1.3 billion, and the NYSE has been the weakest indice, and that has not been doing an ABC structure in the way up, but with option expiration, you could get the volume inside it. NASDAQ Composite, bottom line is that that is in one, and that's going to get the volume. NASDAQ Composite is going to come in. We're already at $3.8 billion. That doesn't need, it already has the volume. Bottom line, though, what I suspect you're going to get out of that is that we're going to get somewhere, we're about 4.5 billion. So it's going to be a wild one watching this shake out. If we go into the NDX 100, the 3 Qs, what you're going to see with the 3 Qs, we're at 57 million. Now, that's not enough, but what we will more than likely get out here, the high of yesterday was 214.39. We did 64 million. Same type of setup. When we come into the close out here today, you are going to get a monster amount of volume because right now you still have 5 minutes left. And what does happen is that the aspect of how these closes come in at the close, the amount of volume goes exponential, because the reason it's going exponential, folks, is this, is that you have the option market makers, okay, as they're closing all their options. So picture options just like a horseshoe, okay, but just upside down. You get the buys on one side, the sells on the other, okay. When they're evened out, what ends up happening coming into the close, they're going to be, if it was the buys, they're going to be selling. The sells, they're going to be buying, so they're flat at the end of the day. They have to be flat because the expiration. That's what you're looking at. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great weekend. Have a safe weekend. Come back and visit us Monday morning, 8:30. Tommy kicks us off. Please tell your friends about TFNN, folks. Have a great one. Bam! Look at them.